Hello guys, in this video we are going to see about example 2, 3, 4 and then example 1. If anyone not yet subscribed our channel, kindly subscribe, bookmark. To solve these examples, we need to be clear in these three golden rules. First one, Pranab gives loan of rupees 500 to Nanda. So, Pranab gives loan to Nanda. In this case, Pranab gives benefit. Here receives benefit and the receives benefit. So since he gives benefit, Pranab account should be credited, who receives benefit should be debited. Since both accounts are personal account, rule 1, debit the receiver and credit the giver. Second one, Sarath sells goods to Vilas. Okay, so Sarath sells goods to Vilas. So debit the receiver and credit the giver. Sarada sells the goods means Sarad only giving goods. Next, Susma withdraw 10,000 from Deena Bank. Susma withdraw 10,000 from Deena Bank. Okay. Debit the receiver and credit the giver. Susma withdraw 10,000 from Deena Bank. Deena Bank only giving. Okay, Deena Bank is the giver. So debit the receiver and credit the giver. Next one, third example. Jaiib purchase furniture worth 5,000 for cash. So purchases furniture. Furniture is a nominal account. Debit what comes in. So we are purchasing furniture. So furniture account we have to debit. Furniture is incoming. So debit what comes in for worth of 5,000 for cash. We are purchasing in cash. So cash is going out. Credit what goes out. This is rule 2. Debit what comes in and credit what goes out. Next one, Prasad purchase goods worth 5,000 from Ram. So is purchasing goods. So goods is incoming. Debit what comes in. Prasad purchases goods worth 5,000 from Ram. So here they didn't mention anything like cash. In previous sum for cash they mentioned. Here they did not mention term for cash. So we have to consider this is an credit transaction. Ram is giving credit. So Ram is giving credit. So credit the giver. Ram account is credited. Next, Suresh receives 5,000 from Ramesh. What he receives? 5,000 from Ramesh. He is receiving cash. debit what comes in, who is giving Ramesh. So Ramesh is giver and credit the giver. In this case, both rule 1 and rule 2 is involved. Next one, fourth example. A trader pays 1500 to his manager as salary. He is paying 1500 as cash only. So credit what goes out and then to his manager as salary. So salary is an expense. Debit all expenses. Next one, example 2. Ram Niklal pays rent 500 to the property owner in book of Ram Niklal. In his point of view, cash is paying, cash goes out. So credit what goes out is paying rent. Rent is an expense from his point of view. So debit all expenses, but from owner's point of view, he receives the cash. Okay, in the book of property owner, for him cash comes in. So debit what comes in is rent. He is receiving rent as an income. So credit all income should be credited. Okay. Example 1, they given the transactions. First we have to write in a journal in chronological order. Then we have to post in the corresponding ledgers. We have to write in the corresponding accounts. First one, purchases goods from Ashok. We are purchasing goods from Ashok. If it is blank like this, we have to consider this one as a credit transaction. We are purchasing goods. We are purchasing means goods. Goods it's incoming. So debit what comes in. So we are debiting purchase account since we are purchasing. And then who is giving on credit? Ashok. We are purchasing from Ashok. Ashok is a giver. So his account is credited. Next one, sold goods to Madhav. We are selling goods to Madhav. Since it is not clearly mentioned, we have to consider this one as a credit transaction. So we are selling goods going outside. Okay, it means debit going outside means credit what goes out. So sales account should be credited. Okay, goods going out, so it's in sales, so sales account should be credited. To whom we are going to sell? Madhav. Madhav is a receiver in this case. So debit the receiver. Next one, Pinto invoiced goods. Pinto giving an invoice for goods. It means we have purchased something, for that they are giving invoice bill. What we purchased? Goods. So goods incoming. So debit what comes in. So purchase account should be debit. And who is giving invoice bill? Pinto. It means you are purchasing on credit. So Pinto is giver. So Pinto account should be credit. Next, it mentioned purchased goods. Purchased goods, no name is mentioned means it is a cash transaction. So we purchased goods means goods are coming inside. It means purchase account should be debited. Cash, we are giving cash for that. So cash is going out. Credit what goes out. Next one, cash sales made. Cash sales made means we are giving, we say sold some goods. Goods are going outside. It means sale account should be created. Create what goes out. Okay. For that we are receiving cash. So debit what comes in. Next one, paid cash to Ashok. So here cash is going out. Credit what goes out. To whom we paid? Ashoka. In this case Ashoka is an receiver. So debit the receiver. And then received from Madhav on account 2000. We received 2000 from Madhav. So it is in cash. So we received cash. It means debit what comes in. We received from Madhav. It means Madhav gave. Madhav is a giver. So credit the giver. Okay, now we'll write in journal book. This is a journal. First one is date column. Okay, first to purchase goods from Ashoka. So purchase is a debit transaction. So purchase DR, debit side 5000, and we are crediting to Ashok. Credit means you have to mention to Ashok 5000. Next one, Madhav. Sold goods to Madhav. We sold goods to Madhav. It means sales account should be credited, Madhav account should be debited. Always we have to write debit only first. Madhav account is debited and we giving credit to the sales account. Next one, Pinto invoice. You see we have to write in chronological order. Here purchase account is debit and Pinto account should be credit. And then 9th one, purchase goods. Here purchase account should be debited, cash account should be credited. We have to write journal book in like this only. This is for explanation. I wrote like this. Next one, Jan 15, cash sales made. Okay, so cash account should be debited, sale account should be credited. See, debited, credited. Next, Jan 18, paid cash to Ashok. So Ashok account debited, cash account credited, and then last one, cash account debited and Madhav account is credited. After this we have to post these entries in corresponding ledgers. Okay, first one is purchase account. We see where purchase account are affected. Jan 1 purchase account 5000 debit balance, and then Jan 8 purchase account 8000 debit balance, Jan 9 purchase account 7000 debit balance. Okay, only 3 entries are there. These 3 entries we should write here in purchase account. Here JF is in journal folio, page number 10. In journal book it is in page number 10. Here LF means ledger folio. This purchase account is in LF 51. So straight to purchase account we will write LF 51, straight to purchase account 51, straight to purchase account 51. This is page number for our reference. So here we said if we have to find a particular expense. Okay, suppose you have to find a particular transaction affecting a personal account or expense, we have to turn over journal, add all debit and credit. We have to add all debit and credit to find out the particular account. To overcome this difficulty only, we created ledger. See, suppose if there is no ledger, if anyone asking what is the balance of purchase account, we have to check here on 5,000 and then here on 8,000, here on 1,000. Then we have to add like this. Each and every time we have to add from a journal account. But after posting in ledger, if anyone asks what is the balance of purchase account, 7,000, 15, 5, okay, 20,000 in debit balance. Okay, like this we can able to say clearly this is what they given in the first step. Pertaining to a particular transaction, it is very difficult to find out in the journal book, so we created the ledger one. Next one, Asoka account. See, Jan 1 Asoka account, credit balance 5,000. So credit balance 5,000, and then Asoka account is 4,000, debit balance 4,000, debit balance. From here we can say that Asoka account is 1,000 rupees in credit balance. Likewise, Madhav account, we have to see where the Madhav account is affected. Here Madhav account is affected Jan 20, 2,000 credit. So Jan 20, 2,000 credit, ledger folio 10. Likewise, Madhav account here 4,000 debit balance. We return 4,000 in debit balance. So if anyone asks what is the balance of Madhav account, 2,000 in debit balance. Likewise, Pinto account, only one transaction, we return as 8,000. Like this, sales account, see, sales account here 4,000 credit balance, and then we return 4,000 credit balance. Then sales account to sales 12,000 credit balance, 12,000 credit balance, and the last one is cash account. See, here what they given a opening balance is cash in hand is 15,000. It means opening balance. You have to write opening balance brought down 15,000, and then where is cash account? Here cash Jan 9 7,000 credit balance, 7,000 credit balance, and then cash account 12,000 debit balance Jan 15, 12,000 debit balance Jan 15, and then cash account 4,000. It is a printing mistake. It's 4,000, 4,000 in credit balance. So 4,000 in credit balance, and then Madhav debit balance 2,000, debit balance 2,000. Okay, this is the procedure. If they given data like this, first you have to write in journal entry by using the 3 golden rules, and then we have to post them in the corresponding ledger folio. The importance of ledger folio is it is very difficult to find out the particular person's balance from journal account. To simplify this, to overcome the difficulties, we created ledger book. From that we can able to find balance pertaining to any account. Thank you for watching video. If anyone not yet subscribed to our channel, kindly subscribe, bookmark.